Welcome to this in-depth report on the United Kingdom's housing market, one of the most turbulent, unpredictable, and regionally divided markets we've seen in over a decade. Today, we're breaking down the latest data from national price indexes, market trackers, and expert forecasts to help you understand exactly what's happening, where it's happening, and what it means for buyers, sellers, renters, and investors across the country. The UK housing market is experiencing sharper price cuts, soaring supply, declining demand, and a deepening divide between the north and the south. But despite the turbulence, long-term projections show surprising pockets of resilience. Let's dive in. The UK housing market is at a crossroads. As we head towards the end of 2025, the latest data reveals growing uncertainty, falling asking prices, and a deep regional divide that could reshape property trends for years to come. In this report, we're unpacking the most important developments, from national price drops to north-south splits, and from budget jitters to market saturation. Let's start with the latest from the UK House Price Index. According to the most recent data, average house prices in the UK fell by 0.6% between August and September 2025. On a 12-month basis, prices are still up 2.6%, putting the average UK home value around £272,000. Digging into the regions, London stands out, but not for the right reasons. The capital was the only region to see an annual price decline, with values down by 1.8% year-on-year. Meanwhile, Yorkshire and the Humber saw the strongest annual growth in England, rising by 4.5%. That downward trend is echoed in England overall. Average property prices ticked down 0.8% month-on-month, bringing the English average to £293,000. So far, these numbers suggest a market that's slowing, but there's more beneath the surface. On the front line of buyer and seller sentiment, Rightmove's November 2025 data has triggered alarm among many. In a surprising twist, asking prices dropped by 1.8% in just a month, landing the average asking price at £364,833. That's the biggest November drop in more than a decade. Rightmove attributes this drop in large part to budget uncertainty. With the UK's next fiscal statement looming, homeowners and prospective buyers are pressing pause. The number of available homes on the market is now at decade-high levels, limiting sellers' ability to command premium prices. Even more startling, 34% of homes listed have had their asking prices cut, with an average reduction of 7%. Higher value segments are being hit particularly hard. Homes priced over £2 million are seeing a 13% drop in agreed sales, while those between £500,000 and £2 million are down 8% year-on-year. What's driving this slowdown? According to real estate analysts, the market is gripped by what you might call budget blues. Speculation around changes to property-related taxes, possibly targeting higher-value homes, is making buyers nervous, particularly at the top end of the market. RSM UK, for example, links part of the market's softness to this uncertainty. RSMUK.com they note that new buyer inquiries remain weak, even though mortgage approvals have ticked up slightly. Political tension, shaky consumer confidence, and inflation worries are all weighing on the decision to buy. Meanwhile, drilling down into regional performance shows a striking north-south divergence. In the northwest, especially around Manchester, house prices are outpacing the national average. The latest index data shows average home values in Manchester increased by 3.5% year-on-year. In contrast, London remains weak. The combination of falling prices, high taxes, and caution among buyers is creating real pressure. That divide is more than a trend, it's structural. Northerners are still chasing value and stability. In the south, buyers are hesitant and sellers are lowering prices to compete in a crowded market. The big question on everyone's mind, how long will this last? Rightmove's data gives a hint. Despite the slump in asking prices, agreed sales are still up 4% year-to-date compared to 2024. This suggests there is still underlying demand, but sellers are paying a price for timing their exit. Meanwhile, experts warn that the market dynamic is shifting. High supply is giving power back to buyers, and sellers are beginning to look vulnerable in what was once their domain. Even without a classic housing crash, affordability remains a major concern. Higher mortgage costs, inflation, and property tax speculation are all eating into buyer confidence. According to RSM UK, this cocktail of risks is dampening both the desire and the ability to commit to large property purchases. So, what does all this mean, practically, for different people in the housing ecosystem? If you're a seller, particularly in London or other high-value markets, you may need to reset your expectations. With strong competition and falling asking prices, realistically pricing your home could be more important than ever. If you're a buyer, the data suggests opportunities may lie in more affordable areas, especially in northern regions like Manchester and Yorkshire. But the specter of future tax changes means caution is warranted. And for renters or future buyers, this might be a moment to rethink long-term plans. More supply and weaker sentiment could cool competition, but it's not a guarantee. Keeping a close eye on market updates is now essential. In the final analysis, the UK housing market in late 2025 is not crashing, but it is recalibrating hard. Prices are softening, listings are up, and uncertainty is high. The next budget could be a turning point, for better or worse. If you want to stay ahead, stay alert. Subscribe for more deep dives, expert commentary, and market updates you can actually use. Because in a world where anything can change, knowledge is your strongest asset.